Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today we've had a lot of earnings reporting. Some stocks getting slammed down today, especially CarMax. Huge drop on that. We're going to take a look at that stock here in a few moments. And then also, too, I want to bring up the longer our government shutdown exists, the more likely we're not getting data, and especially the Fed is not getting data to go ahead and decide whether or not to cut rates. Start thinking about this. Jerome Powell was hawkish on December rate cuts just in the last FOMC meeting, and mainly because think about what he's been saying over the last several years since COVID. It's all data dependent. Well, if they're not getting data, they're likely not going to cut rates. I think investors are realizing this and hitting the markets pretty hard. So hopefully the shutdown ends sooner rather than later. So let's jump into the market summary board and see where everything's panning out. We can see here we've got the Dow Jones down 0.89%, Nasdaq down 1.56%, S&P 500 down 1.08%, U.S. oil taking a little bit of a spill, down 0.22%, gold flat on the day, still under $4,000, and Bitcoin starting to see pressure reemerge, pushing price closer back down to the $100,000 mark. Crypto obviously is a risk on scenario and risk on investment asset, and it is getting hit along with the rest of the market. So look at this S&P 500 heat map, and we do see some of the bigger players now in red, right? We see Nvidia down here, 3.82% down, Microsoft 1.85% down, Meta continues plunging, down 2.72%, Oracle down 2.57%, Palantir 6.71%. A lot of these high flyers getting tagged and hit. Amazon down 2.71%. Down here in the lower left corner, AMD down 7.21%. We're going to take a look at that chart here in a moment, seeing if it's about to start breaking down. Okay, so we jump into the S&P 500. Notice that what happened today, we had a price candle right here, accelerate further down. You know what this price candle does, folks? It confirms a move back down into the parallel channel that then makes everything up here a bull trap, at least for the time being. Now, understand this, folks. Whenever price, and I've said this how many times on the show, whenever price breaks a trend line, it often likes to go back up and retest that trend line, okay? So you can see here just yesterday, we had price flirting with the top end of this parallel. And in essence, the top end of that parallel is another trend line. But we didn't confirm into the parallel channel. We did that now today, which then could result in further selling tomorrow. But then I do anticipate at one point for us to come back up, potentially retest this top end of the parallel, and then seeing the selling pressure persist from that point, potentially pulling price all the way down to the next major support level at $640.64. Today, we actually came on top of this consolidation and we're bouncing up. We were almost about to not confirm the breakdown on the charts all up until right here, as you see, right about 2:40 in the afternoon. And then we consolidated and then started plunging down the last 3 10-minute candles on the chart, confirming the breakdown into the parallel, negating the opportunity for us to be saved if price action would get back up into this range where price was in previous days. Interesting stuff going on the S&P 500, implying we should be having more downside in the near term. Next up on the Qs, you can see here too, we got this support level at 612.69 now being taken out on the Qs. You can see we bounced up intraday on that level, just like in the spiders, but we started plummeting down further towards the end of the day, now getting into this gap fill right here at $610.58. Selling pressure continues. Then we're coming down here to this inclining trend line at $595.01. followed by $581.64. Also note, we've got a time count scenario both on the Qs and the spiders. If you don't know your time counts, do yourself a favor. Take advantage of some of our sales coming later this week on our educational courses, namely the Winning Trader series, as well as mastering the overnight trade. Next up, we've got the SMH. SMH, as you see here, folks, yep, there we go, mastering the overnight trade right there at the bottom of the screen, folks. First lesson in that module talks about time counts because they are critically important to understand because the markets move this way. It's human psychology. All right, nonetheless, we also time count on the SMH. Nice further move here, also confirming back down inside this parallel channel today. What does that tell me? Likely we have an opportunity to come back up, test the top end of that parallel at $365, but then we should be coming back down further on the charts of the SMH at $341.98. Next up, the IWM. Now, the IWM, it already confirmed. It confirmed down underneath this parallel channel right here on this day with this one candle on Tuesday, November 4th. Had a little poke up higher the following day. I was even anticipating potentially coming back up and tagging this inclining parallel channel, but not so fast, the IWM said, and got plunged right back down, closing the day underneath the November 4th candle, insinuating and implying further downside to come. Next support is going to come right near this gap fill that occurred from Friday, October 10th. As you see, that gap fill is $237.79. Then there's also a fib support level right here, $237.33. Now, keep in mind, folks, these are the first levels of support. If we are going to have a scenario where the markets start to come down and correct a little bit more, the first area of support usually can get blown through. It could have a minor bounce, but then eventually gets blown through and comes down further on the charts. I'm going to have more levels for you if and when we start getting into that scenario on the IWM. Next up, Bitcoin. Now, guys, what does this look like here on the charts? We've got some massive moves down, sideways consolidation. We got another massive move down. These 2 trading days, sideways consolidation, folks. What is that? That's bearish consolidation on the charts. Now, also, with breaking a parallel, I could even see a scenario where Bitcoin rallies back up to this parallel. That parallel is $107,000 on the chart. But if we notice this declining trend line is preventing that from happening. This declining trend line has provided support while price has been above. Every time it's come down, you can see we've gotten a nice bounce, bounced up, hit it again, got a nice bounce up. But notice too, this bounce wasn't as high as that bounce. So it's getting weaker every time hitting that trend line. Makes sense though, when price breaks it, we've come back up to retest it. And that could be, if this bearish consolidation continues, that could be the near-term highs here on Bitcoin. It certainly could, as we haven't touched this next level of support down here at $97,581. I do anticipate that to happen, especially if we continue to have sideways consolidation. Next up on gold, not too much to report here. Down move, sideways consolidation, down move, sideways consolidation, not consolidating near the top end of this channel or this price action range. Matter of fact, we're all around it. That's telling me it's more bearish, implying gold's coming back down here to the top end of the parallel channel, just above $3,700. Similar scenario here on silver. Now, for a few days, we were up here near the top end of consolidation. And since we've come back down, even today, we tried to fight to get back up here and close, but we're not making it happen on silver. So right here, this level of support, $46.79, currently still holding price. The more we continue to consolidate sideways, the more it implies we're coming down to the next level of support at $44.26, followed by this inclining trend line at $41 on the charts. Next up, U.S. oil. You see here, U.S. oil, it did have a down day today, but it's putting in a doji candle, very, very close to a doji. Let's just call it a narrow body bar. That's telling you that there's indecision. There's equal amount of sellers and there's equal amount of buyers right here. Now, price did come down and touch this little area of support, but should price continue to sell, the next level of support is going to be right around $58 to $57.50. So we still could be coming down on oil, especially if this trajectory continues to push us down. Notice both yesterday and today are closing beneath the wicks that occurred on October 30th and 29th. That's telling us that there's near-term weakness in oil. But what I see here going on with this narrow body bar is trying to flip that narrative a little bit. Again, when you're analyzing charts, I'm doing so on a daily basis, trying to give you the best insight to where probabilities point. Price is going to go tomorrow, the next couple days, as well as the next week. Clearly, we've got a level of resistance right here, and this is weakening price action right here on the chart of U.S. oil. Kind of a coin flip scenario now with this narrow body bar for going down tomorrow or staying sideways tomorrow. We're going to have to reevaluate that tomorrow and check that out on the next Trading the Close show coming on Monday. All right, so next up, Nat Gas. Nat Gas, beautiful push today. Look at this, $4.47, getting above this resistance level at $4.45. As I've stated yesterday and earlier this week, this chart's a little extended, folks. Natural gas likely should start consolidating a little bit more within this range, $4.08 as well as $4.45. Now, we've gotten above it, right? So we've gotten above that area now. Now, for tomorrow, if you're a nat gas bull, you want to see price get above today's candle. That will establish itself above the $4.45, which is now resistance level. And if it does that, then that clears the way for price to get up to $4.70. Now look at this. If I scroll back out on the chart, right here on the chart back in, there we go, March 10th of 2025, we've got a daily topping tail here on the chart of natural gas. Now, if we start pushing up higher, this $4.70 area is actually a 50% retrace of this daily topping tail candle. Now, the very top of that is at $4.92. Both $4.70 and $4.92 will be very stout resistance, especially considering this sharp move up on nat gas that likely should be met with another sharp move back down on the charts. The thing is, Northern Hemisphere is coming into winter months. Nat gas demand should be increasing during this time frame. We'll see how that pans out, but no doubt about it, near term, this chart is a little bit extended, in need of a little bit of a pullback before we can go up higher on the charts. Next up, Datadog. Now, Datadog did report earnings after the bell, or pardon me, before the bell today, as you see here on Thursday. Look at this pop. Their earnings per share up 20.97%, excuse me, and the revenue up 3.86%. Now, if you notice here on the chart, I've got a longer term inclining trend line here on the daily time frame of Datadog. Now, price accelerated straight up into that and really hesitated here for most of the day. You can see that displayed on the 10-minute chart. We poked above, got beneath, tried to get above again, then dropped down, then made a last push towards the end of the day before finishing the day and tagging this trend line. That tells you there's a lot of resistance right there. But Datadog's earnings blew through this. It was able to get through and close above it today. So a major accomplishment for Datadog. For that momentum to continue, you need to see price close above today's candle. The high today is $194.87. If it does that, that flips this trend line into support. Right now, this is just a minor level of support and it can easily get sold right back through tomorrow if selling pressure arises. Otherwise, if we do establish above, the next stop is the all-time highs just beneath $200 at $199.68. Now, should this momentum get rejected for supports back down here, a little bit above where earnings were announced, right here at $168.15. Next up, CarMax. Man, CarMax really got clobbered today, guys. Couple different reasons for this. Now, first off, it's important you understand, too, CarMax is the largest U.S. retailer for selling used cars. The volume that they sell of used cars, not new, but used cars is the biggest in the United States. And this obviously displays that there are problems with, one, interest rates and problems with the retail consumer buying up used cars. The rates are just too high. The costs are too high. So they're starting to see volume decline. But this sort of drop on the stock, look at where this price action is, guys. If I rewind the clock back, flip over to the weekly time frame, right here, folks, is the COVID lows. We're now trading substantially beneath the COVID lows on CarMax, where a lot of people thought the world was going to kind of come to a halt, right? Especially economically, but now we're down beneath it. And then shoot, we're back here in prices from 2012 on CarMax, erasing all of these gains that you see up here on top of the chart. CarMax got up above $150 and now it's at 30. Ouch, man, that hurts. But there's a lot of support in this range. You can see that too. I've displayed it, condensed it, given you the cliff notes, if you will. Right here, 29.45, the next level of support, followed by 25 bucks. Now, there was a couple reasons. Like I said, the volume's decreasing, but then they also have a CEO that is exiting the company. So this is providing uncertainty for the near term in CarMax. Once they get that underway, as well as they've got a class action lawsuit, which should be finalized at the beginning of January. But once that gets out of the way, I do see CarMax having a tremendous bounce, as this is extremely oversold near term. We could see price return all the way back up to this $40 range, but still right down here, it is definitely a risk. All stocks are risks. However, when I see a big drop like this, I start salivating because I know once that bad news gets out of the way, investors are going to start piling back into stocks extremely beaten up, as that's what investors do. We cycle through money. We rotate money from one high flyer to another stock that needs to get going. And then usually they start picking up steam and pushing up higher. Then we exit that position and move on to the next play and wait for another bounce. But geez, CarMax got destroyed today, guys. Another stock. Big, huge drop on earnings is DoorDash. Now we see DoorDash down 17.45% today. They missed on earnings per share by 19.45%. And they also beat, though, on revenue by 2.72%. Again, another hit for the retail consumer. CarMax, as well as DoorDash, are utilized by a lot of individual folks, not major corporations. So you see a big fall down here on DoorDash. Now notice this longer term inclining parallel channel extends all the way back to July of 2024. It's contained price throughout this entire time from the bottom to the top side. Also great respect of price right around this 50% area of the parallel. And we are coming outside of it today. Now, one thing for DoorDash, if you're a bull on DoorDash, you don't want to see price tomorrow close beneath this candle's low. The low's there at 194.68 cents. If we do that, then that implies we're coming down to the next level of support down here at $183.15. Now, if we don't close there, underneath, we could easily start marching right back up into that parallel channel. So tomorrow is going to be critical for DoorDash. Where does price close? Do we get a close within this candle? That will still give an opportunity for DoorDash to be saved with price pushing back up into that parallel. And if it does, next resistance all the way up here at $230.50. Now, next up, a couple big players, right? Couple big high flyers, and hang around for these. Obviously, AMD and Nvidia next. But guys, AMD had an explosive push most recently from the October push that we've seen here down near $170 in trading, got all the way over $260. So let me rewind the time just a little bit to show you this parallel channel on AMD, which AMD is now violating to come right back into this parallel channel. And on the weekly time frame, this goes all the way back here to October of 2022. So I zoom back into the daily time frame. Now, yes, we've only got one candle in this parallel, very similar to DoorDash, one candle out of it, right? So we've got one candle in to confirm price back into this parallel. We need another candle moving down lower under today's low at 235.74 cents. If that happens, that does open the probabilities, actually increases those probabilities that price is going to come down to the next support at 208.46 cents. Following that, we've got support at $194.63. But really, if that were to occur, talk about a lot of steam being let out of the AI data center play, as AMD was really picking up pace with Nvidia, trying to take some of their market share. But man, if this happens, we're coming straight back down on the charts. Be mindful and be watchful for tomorrow's price action on AMD, especially if you're a bull. You want to see price get right back above this parallel channel, right at $241.50. Lastly, we've got Nvidia, folks. Now, this parallel is a little bit more of a shorter term parallel from the April lows, but you can see here clearly it's done a great job containing price for Nvidia. But over the last 7 trading days, guys, it's all red on Nvidia. Now, notice too at the 50% area, we did push up here, didn't confirm, got back down underneath the 50% area. Then we made another nice push up on November 3rd. Didn't confirm on November 4th as we plunged right back down. And not only did we do that, now we're starting to get close to the bottom end of this parallel channel. The bottom end is at $184.50. And if that happens, folks, that breaks a very stout trend that Nvidia has been on, as I said, since the beginning or beginning of April. Now notice the next significant level of support is here at $182.56. So this is going to be really interesting how and if price breaks this parallel. It's going to tag support right here. We're going to need price to break and confirm underneath for further movement down on the price for Nvidia. So with support so close, this is going to be really interesting to watch in the coming days and weeks. What happens to Nvidia? Does the parallel save it? If not, does the support save it and rocket it right back up inside the parallel? But if it doesn't, oh man, we're headed down to 164.22 for the next stop. But a lot of decent support, very close here for Nvidia. But as you see, it is right on the edge of a cliff that could propel the stock down further. Be mindful of these things. That doesn't mean it's going to guarantee to happen, but you've got to be prepared for this, especially if you're long in Nvidia or if you're long in AMD. You need to recognize when they break down and strategize to have a plan to get your trade back in the money as soon as possible. And the smart way too, before just overloading when you're up here at the highs. All right. So that wraps up Trading the Close, guys. Thank you so much for tuning in. Don't forget to like and subscribe. Also, please send this out to your friends and family so that they too can start learning technical analysis on the charts and really helps pay them off if they're interested in trading. Guys, we'll have another Trading the Close on Monday. Until then, guys, have a fantastic weekend. Can't wait to be back here studying the charts with everybody. All righty. Take care, folks. Be safe.